when we talk about life insurance, how do people generally feel about life insurance, do you think? Or when you hear life insurance come to your mind, what do you think about? Anybody can answer.
You have to die to get it.
You have to die to get it. There you go.
I think there's a thought with some people that they're too young for it. They don't need it. It's for later in life.
Why spend the money when you're young?
Why spend the money when you're young? Why, why bother doing it? Or if you're going to think about it, you have to think about your own death. So there's a lot of reasons, I think people think not to get life insurance. But when people are surveyed, they often feel overwhelmed with all the different options of life insurance. What kind do I get? How much is it going to cost? There's a lot of factors, a lot of unknowns. And so people often say that they feel overwhelmed when they think about life insurance. But according to some statistics from LIMRA, which is a life insurance organization, they say about 1 in 3 consumers acknowledge their need for life insurance. So people, 33% of the population think about life insurance. And of those that have life insurance, about 21% of them say that they're not adequately protected. So of those people that have life insurance, they themselves think, I actually think I might need a little bit more life insurance, or actually the life insurance that I have isn't actually meeting the needs of me and my family. So today we're going to go over 4 different questions concerning life insurance. First, what is it? What is life insurance? How much should I have? What kind should I own? And how much does it cost? So first, what is it? What is life insurance? It's not, like we've kind of suggested, a topic that a lot of us want to focus on, but it's such an important question, especially if we have people in our family that depend on us financially. So life insurance answers the question, what happens to my loved ones if I'm not here? And it primarily does 2 things. It provides retirement income, and it pays your final expenses. So in a sense, if you die and you have life insurance, your loved ones will have an immediate estate, which is usually income tax-free. An immediate estate that's income tax-free for your loved ones. So, when we think about life insurance at the Catholic Order of Foresters, we've come up with an idea, an acronym, to think about how much life insurance should I have. So we talk about what is life insurance, but when we think about how much should I have, we've come up with this phrase, DIME. And DIME stands for debt, income, mortgage, and education. Debt, income, mortgage, and education. So when we think about life insurance, it can be overwhelming. So this is kind of a simple way to think about it. So what are our immediate needs? What are our immediate income needs for debt? Do we have any credit card debt? Do we have any student loans to pay off? Do we have any car loans to pay off? Income. If you weren't around, how much income needs to be replaced for your family? And 2, if you're saving for retirement, what are your retirement needs? Because retirement is really a function of income. So if your spouse or significant other dies, how do your retirement financial goals change, right? Because now you have one spouse less to contribute to something like a 401k plan. Mortgage. How much is left on your mortgage? And finally, education. Are you preparing for your child or your grandchild's future education? So that's a simple way, DIME, debt, income, mortgage, and education, to think about how much should I have. And then you can go through a little bit in more detail to think about, like we said, income replacement, financial obligations like credit card, mortgage, college tuition, medical bills, and retirement. And then there's also expenses, like final expenses like funeral costs and estate settlement costs. and then ongoing costs for living like utilities. So there's a lot of different ways of calculating how much life insurance you might need. And each individual circumstance is going to be a little bit different. So it's important that we have, a complete financial picture of ourselves. But when we think about life insurance, we could think about DIME, and we can start going through some of these different items of our financial picture. Anybody have any questions at this point? No? Great. So when we think about how much life insurance should I have? There's a few different simple ways of going through it. Some have said, 10 to 15 times your net income. So if your income was $60,000, that would be $600,000. And for 15 times your income, if you were making $60,000, it would be $900,000. So again, this is like a quick and easy way to think about life insurance, but it doesn't quite give you the total financial picture. But it gives us an idea of where we might be going. So now we're going to talk about the different types of life insurance. So we're going to talk about term insurance, and we're going to talk about permanent insurance. So term insurance, it simply is maximum coverage of life insurance at a pretty low cost. And there's a couple different ways of paying for it. The first would be ART, which stands for annual renewable term. So it's a policy that renews each year, and premiums steadily go up. And in a little bit, we're going to look at different ways of breaking it down and how much it might cost. So for one, so that's an ART, and there's also a level term, which is steady premiums for a defined period of time, perhaps like 30 years. So term insurance is often really good for when you're paying for college tuition, when you're paying for debt, or when you're paying for mortgage. So something for a defined period of time. So if you have a 30-year mortgage, you might want to take out, a term insurance policy for 30 years to cover you in the case that you weren't able to pay for that mortgage anymore. So that's term insurance. And there's also permanent insurance. So permanent insurance offers, really lifelong protection as long as premiums are paid. And it offers, a lot of different premium strategies. And it also offers cash value. So cash value is, the equal to the sum of money that's going to build inside your life insurance policy. So while the policy is active, it's in force, the owner of the policy can access the cash value of the policy for emergencies, for loan, for retirement, for potentially money for college if you wanted to use it for that. So I said there's a lot of different strategies that you can pay for permanent insurance with. So oftentimes people are going to pay for permanent insurance their entire life, but you could also do different kind of limited pay strategies. So you could do you could do a 10-pay strategy, meaning you're going to have 10 different payments. You could do 15 years. You could do 20 years. So you don't have to think about your permanent insurance as something you're going to have to pay for the rest of your life. You can fund it in different ways. There's also different types of permanent insurance. There's whole life and there's universal life. Whole life often has level premiums and a cash accumulation feature. And then universal life oftentimes is going to offer flexible premium options, and it's going to offer interest earning cash value options. So in the second part, if an insured's portfolio earns more than the minimum interest rate, then the company might credit your the excess interest to your policy. So you have a potential to earn a higher cash value with the universal life policy. Any questions about permanent insurance or term insurance? Great. We can move on. So the next thing we're going to do is look at paying for life insurance and the different types of coverages that are out there. So as like a little poll for the group of us that are gathered here, is $600,000 a lot of coverage, do you think? Caitlin says no. Rich, thoughts?
No,
Holly, Tony?
it's not, but it's a lot of money to pay on.
Right. It's a lot of money to pay up.
It sounds like
Yeah.
a lot, but I think it would go pretty fast.
It'd go pretty fast. Absolutely. Good. Yeah. So next, we're going to look at what $600,000 might cost for life insurance for somebody. So we're going to go through both for males and for females. So for a male that's 30 years old and has $600,000 of term coverage over a 30-year period and is at a really high rating for health, preferred plus non-tobacco, that would cost him $35,000 a month for a level premium. And if he's going to do this annual renewable term, the first year would be $17 a month. So, you know, a lot of people, when they're surveyed, think that life insurance costs a lot more than it actually does. But for something like this, you know, it seems pretty reasonable. So for a female, 30 years old, $600,000 of coverage would pay $32 a month for a 30-year term and just $10 a month for the first year of an annual renewable term, which will eventually go up. But let's say that that man or that woman wanted to have $600,000 of term coverage, but they also wanted to start earning some cash value with permanent life insurance, maybe something that they wanted to pass down to their family after they pass. So that 30-year-old male with $100,000 of permanent coverage at the highest rating would be paying $71 a month for that. Again, this is something that's going to earn cash value, unlike his term insurance policy, which he'll be able to access or should be able to access. And then for a female 30 years old, $100,000 of coverage, just $64 a month. So when you put those two together, when you have a man or a woman that wants to have a combination of term and permanent coverage with $700,000 of total coverage, they would be looking at $103 a month for the man, and they'd be looking at $92 for the woman for their life insurance each month. But when you think about, you know, the monthly budget and where does all our money go, you know, there's a lot of different ways of thinking about the monthly budget. But if you get a $4 latte once a week, that's $16 a month. Netflix, Amazon, you know, each $13 a month. Cell phone bills are going to average about $80 a month. Car payments, $456 a month. You know, you're looking at something like $578. This is before your mortgage or before your rent payment or before your utilities. So life insurance, you know, compared to your car payment or, you know, might be more comparable to your cell phone bill. And I think when we look at it that way, we can think about the fact that it probably can fit in your budget. You know, especially if you're looking at term coverage for a really young person. You know, if it could cost as much as your Netflix account. So again, of course, it's not a full financial picture. You can kind of get the idea of where your life insurance can fit into your total financial picture. So when we think about life insurance, you know, I think each and every one of us, you know, can consider current financial picture. You know, what is that? What are our future financial goals? And we can think about how life insurance fits in with our current financial picture and our future financial goals so that we can adequately protect the ones that we love and leave a legacy.